we'll just plow ahead with the program here. First, I will introduce Dr. Damien King. Damien Wayne King is the Executive Director of the Caribbean Policy Research Institute, a think tank that focuses on public policy issues affecting the Caribbean region. He's also a senior lecturer in the Department of Economics at the University of West Indies in Jamaica, where he teaches graduate and undergraduate courses in introductory economics, macroeconomic theory, and international trade and finance. His research has been in the area of debt, poverty, and disruption, and international trade, and he has published in the Journal of Development Studies, World Development, and Social and Economic Studies, among other international journals, and also in edited collections. He is the author and editor, with David Tennant, of Debt and Development in Small Island Developing States, published by Palgrave Macmillan. Damien earned a BA from York University in Canada, an MSc from the University of West Indies in Jamaica, and a PhD from New York University in the United States, all in economics. He is currently a member of the Board of Directors of the Office of Utilities Regulation and the Caribbean Policy Research Institute, and has previously served on the boards of Deniso's and Getty's Limited, Doyle Group, Doyle Insurance Company, the National Export-Import Bank of Jamaica, the University Hospital of the West Indies, and the Jamaica Mutual Life Assurance Society. Damien and his wife Joan have 3 sons. He enjoys watching cricket, though with the current performance of the West Indies team, that is hardly the appropriate word. Okay.
Thank you very much. I'm really glad that I was invited here, because that lunch was really good. Caribbean challenges and the need for new payment solutions. The way I would like you to see this presentation really is setting the framework for this entire workshop and this series of hopefully annual workshops that IECLACI is trying to put on. So it makes the case for the attention that we are paying to the problem. Let me start with what is the fundamental challenge of small islands. The fundamental challenge of small islands used to be just the fact of being islands. That our character is determined by geography. Because it used to be the case that information traveled at the cost of cargo. I remember as a young academic that if you identified a journal, a publication, a journal article that you needed to inform your research, you had to contact some foreign library that had a copy of the journal. They would make a photocopy of it, and the photocopy would be literally shipped to you. Information traveled at the cost and speed of cargo because information was always embodied in goods, did not exist as a service by itself. And that fact determined that the main characteristic of small islands was that they were remote from the centers of innovation and the centers of production. And so islands had characteristics that were determined by scale. For one, we lacked the scale for production and trade. That markets were largely limited by the size of the local population. And even more subtly and more important, production couldn't be efficient because even in importing, imported inputs had to be in a quantity that was too small for it to be efficient. Many of the islands, whatever was the required raw material, could not fill a 40-foot container. And so deliveries of inputs were often delayed and extremely costly. The same scale issue applied as well to innovation. asked the question, why was Steve Jobs not born in St. Lucia? Well, no, not because his parents migrated to the US instead of to the islands. The question really is, why is it the person who was born with that expansive vision and that creativity and that drive in St. Lucia, where many were in fact so born, did not get into the business that Steve Jobs got into? And the answer to the question is that if you get an idea in St. Lucia or Dominica or Jamaica on which the real returns depend on scale, if you get a scalable idea, it doesn't make sense to do so if you're bound by the confines of an island. Whereas, if you have 300 million people to sell the idea to at a negligible marginal cost, then it's worth devoting your life to the idea. And the third area where the character of being small and being an island is limiting is when it comes on to anything related to cross-border payments. Well, it turns out when you're an island and your trade shares, your trade ratios are greater than 100%, meaning if you add up the value of imports and the value of exports and divide it by the total product, the total GDP, you get a number greater than 100%. When you are so trade dependent, then everything is a cross-border activity. Everything depends on either importing or exporting. So to be limited by the slow speed and the high cost of cross-border payments is limiting if you're on a small island. This is the reality. This is how the Caribbean's destiny was determined by its geography. I'm going to focus on the cross-border payment problem because that poses, the de-risking problem poses an existential threat to the Caribbean. And it's the best example of how constrained we are by islandness. This is the thing that, more than anything else, risks the Caribbean getting cut off from the rest of the world. It's important for us to understand the nature of this problem. It originates in the fact that it's always going to be cheaper and easier to produce drugs in the developing countries, and the demand is always going to be greatest and its value greatest in the wealthiest countries. In other words, illegal drugs present an inescapable arbitrage opportunity. The world essentially was faced with the utter failure of attempts to interdict the actual flow of drugs. And then we got the bright idea, well, not we, then they got the bright idea that the pipelines for the flow of the payments for those drugs were narrower and more easily identifiable than the drugs themselves. Out of that comes the actions of financial regulators. All the financial regulators came up with anti-money laundering devices, anti-money laundering mechanisms as a result of the failure of physical interdiction. We need to understand that the financial regulators didn't all get together, the Financial Stability Board, the Financial Action Task Force, the G20 group, the Basel Committee, all the different central bankers in Europe and North America didn't all get together and form a common board and make a joint decision. Each of them, acting independently, identified it was in their interest to try to choke off the flow of money, and not just for drug trafficking, but also for financing terrorism. I mean, they have overlapping jurisdictions, and each entity, each regulatory entity has its own rules and requirements, so it's really quite confusing. nearly impossible for a bank to navigate. But never mind that. As a result of all of this regulatory activity, then the cost of being compliant for the international banks that provided correspondent banking services to the Caribbean increased in most instances by factors of 3 to 7. The number of people in their compliance departments and the amount being spent on compliance increased by multiples. Now, when you compare the cost of compliance and the fact that us being small islands, then many of the transactions that now had to pass this compliance filter were relatively small, certainly as far as international banks were concerned. You had a relatively large number to us of low-value transactions. To them, it simply became uneconomical to maintain correspondent banking services in the Caribbean. It was strictly a cost-benefit situation. It was not even worth it to try to manage the risk. It actually was much easier and much cheaper to de-risk, to eliminate that avenue of activity entirely. Now, the reason for going through all of this is to recognize that what we have here at the end of this chain of events, where the local and regional banks in the Caribbean are now faced with simply the loss of their correspondent banking services and therefore the loss of their ability not only to provide remittance services, but to provide trade financial services. What we have is a systemic problem. This is to say, each actor in this chain of events is acting rationally in the pursuit of their own interests. The drug traffickers are exploiting an arbitrage opportunity, which is really what most business in the world is anyway. They're no worse than anybody else. The regulators are trying to identify the most vulnerable choke point to restrict this activity. The international banks responding to that have to de-risk. And the local banks end up not holding the bag of money at the end of this chain. It's important for us to understand the nature of the problem, because it identifies, it parameterizes for us the nature of the solutions that we can look for. Once we understand it's a systemic problem, and all of the actors are acting rationally, then we appreciate that there's no way out of this problem. Many possible solutions are being discussed. There's the political solution, which is being pursued, which is to say, regional governments have lobbied the Department of the Treasury and the Exchequer in England to try to find a way to mitigate the effects of this problem. But this is not within the control of the Department of the Treasury in the US or within the Exchequer in England. They don't control the regulatory bodies. And in fact, there are regulatory bodies that have jurisdictions that entirely overlap what those central banks are responsible for. So persuading them doesn't get us very far. There are commercial solutions, many of which are referred to in Capri's paper on this issue, but the most useful seem to be the Know Your Customer utilities. And if we combine that with some amount of coordination for their data requirements and interchangeability of data, we'll make some progress towards reducing the cost of compliance for the local banks and transparency and access to data for the correspondent banks. Well, that would make some kind of a difference if the international banks were looking at the problem on a case-by-case basis. But many of them are de-risking the entire problem. So that kind of solution is going to get us only so far. And there are regulatory solutions, which means trying to persuade the regulators to make policy decisions that allow for these transactions to take place. Well, again, if what we're dealing with was a single overarching global financial regulator who made a particular policy decision, then perhaps some kind of compromise could be worked out. As we said, that's not the world in which we live. It's a systemic problem in which they are responding optimally to a situation that they cannot change. So what does that leave us with? It leaves us with one possibility. And the way in which the world has changed dramatically from the one in which we had to literally ship a journal article when I was a young researcher. We used to talk about the buzzword of a decade ago was the information highway, the information superhighway. Well, we've gone a bit beyond that now. And for us, we want to call it the information sea route, if you will. Well, two things have happened. One is that information has become disembodied from physical objects. That's the digital revolution. Information now exists in a pure form. When you pick up your smartphone and you do a Google search, all you're getting is pure information. Coupled with the massive layout of information technology infrastructure over the last decade means that that disembodied information can now travel instantly, costlessly. This is an amazing thing for anybody to contemplate, anybody, more than 15 years old to contemplate. But if you live on an island, this represents the death of geography. It represents the death of geography. And there is no greater application of it than the one that has to do with cross-border payments. It has many applications because now that information has been disembodied, then all information-based services can now be delivered on the global scale. Doesn't matter whether you're in the United States or you are in St. Kitts. Any information-based service can now be scaled globally. And that explains why we have so many exciting tech startups in the Caribbean. But it serves to make the biggest impact, in particular, when it comes on to the de-risking problem. Because distributed ledger technology depends more than any other one on fast global connectivity. The ultimate idea of DLT is that the same ledger can exist literally in different parts of the world and be identical. And that requires each of these ledgers constantly talking to each other at the speed of digital communications. That opens the possibility that, by adding on the technology of blockchains, that opens the possibility that we can now actually bypass entirely the international payments problem. This technology is already taking its first steps out of the lab. And there are a number of experiments going on. I read recently that a company called Synapse is using blockchains to automate trading in the leveraged loan market. BBVA, the Spanish bank, has already tested an international payment between Spain and Mexico based on a platform out of San Francisco called Ripple. NASDAQ is already processing trade shares using blockchains. And the UK's Financial Conduct Authority has given authorization for a company called Pramonix to make cross-border payments based on its digital currency. The UK's Financial Conduct Authority. Now, given where we started, which is that the de-risking problem presents the biggest threat to small islands and has the potential to liberate small islands from constraints that did not exist for the UK. It raises the question, why is the UK's Financial Conduct Authority the first mover on this, and not the Bank of Jamaica and the central banks in Trinidad and Barbados and the ECCB? Fully understanding and appreciating that central banks have to move cautiously, but in that balance between prudence and aggressiveness, even a rational cost-benefit analysis would suggest that since we have the biggest problem, since we face the existential threat, we need to be the ones to shift that balance slightly towards being more aggressive. So, initial steps are being taken. But the point is that it is the Caribbean that has the most to gain. And it is the Caribbean where we need to encourage these steps. Because DLT and the IT architecture of the world, for the first time, solves the inherent problem of being an island. For the first time, the Caribbean can choose not to be islands economically, simply by moving more aggressively and facilitating these technologies. For the first time, our destiny is determined not by geography, but by connectivity. And we need to seize this opportunity. Thank you.